Hello, welcome to another market review for the week ended 19th June 2020. I will tell you that the week under review has been on a downtrend and really a bearish week to say, because the market for the week lost almost 1.41% as the Ocean Index opened the period at 25,182.67 points to close at 24,826.75, meaning that the market have lost 355.92 basic points for the period under review. And I will tell you, for this period, the market was up, just up for the week, and for the rest of the day, the market was in red. If you look at this chart, the market opened on a huge sell down. Profit takers, were really selling off after the market have recorded almost more than altogether 12% for the month of April and May, which I said in the last week review. And if you look at this week, market lost on Monday 0.91%. The same thing on Tuesday, market lost 0.10, and on the Wednesday, which is the midweek, market tried to reverse back, but marginally he gained 0.17. On Thursday, market pulled back to the south direction again, losing 0.16, and on the last trading of the week, market really oscillated. I can tell you it was volatile that day. Market was up, but it finally closed down on the strength of what the profit taking activities. I will tell you that for the week under review, market really had a serious sell-off. There was profit taking. I will tell you the momentum for profit takers in the market is on the high side for the week. Is a sign that the market is really moving to a southward direction. That means another downtrend is at the corner. For me, investors should be very careful at this point. If you look at this weekly chart, I showed you the first week that was a daily chart. If you look at this weekly chart for the past, let's say 4 weeks now, if you can look at this rectangle here, from here to here, this is the resistance and this is what the support. Market has been side trending. You can see it yourself, moving on the sideways, not making up direction. But now you can see that from Friday, last Friday or last week activities, you can see that the market in terms of sell down has increased for the week ended June 19, as market lost 1.41%. This tells you that the sellers are getting more strength than buyers. And also I will tell you, buyers at this point are really not willing to take position at the current market prices, just because one, they are pricing in the expected earnings, and at the same time, if you look at the economic fundamentals as we speak, is still shaking. It's still shaking, not really attractive as we speak now. But the market in the month of April and May has rallied on sentiments, not really market fundamental. That is why at different corner people are saying that, oh, there's a great disconnection between them. We agree, fine, but because there was liquidity in the market and also prices were low, there was an attraction, and that pushed the market. And if market are rally for 2 months, I will tell you that it's expected to slow down, and it is not abnormal. This is part of what market, and also a recovering market, you don't expect it to keep on moving in a V direction. There's always, now market has formed cup and handle, as I tell you, with this side trend. That means yes, the opportunity to move up is there and move down is there. At this time, market is likely to continue in the up direction and also continue in the down direction. But I will tell you that the factors that put the market in the down direction are more than the one that push it in the up direction. As we speak now, there's no positive news around the market that will push the market in the up direction. Yes, the CBN and the government try to bail out the sectors, which is good. They are just injecting funds, and this company also need to work with this fund and bring better numbers that will support their price. After the sentiment have moved their price, now I can see there's great correction in many of the sector, especially correction in the banking sector has started already. Correction in the oil sector is still there, and in the industrial sector, just like, if not that Boa Cement has been up as a result of the one naira 75 kobo dividend they declare, and also knowing that that company shareholding structure is tight, in the hand of just few people. That is why the price has been a bit stable. But for me, the 1 naira 70 kobo is not too good for a stock that is selling for almost 44 naira, while stocks that are selling for even below 43 that declared 2 naira has not rallied as much, just because of the shareholding structure of this company. I'm also telling you that is why you see that the industrial goods are still up. The consumer goods are coming up, but I will tell you, consumer goods is the major sector to measure the purchasing power of Nigerians. This tells you what is happening in the economy, knowing that this COVID-19 has really weakened the purchasing power of many people. Why? Because in their place of work, there is no cut in salary, and at the same time, some will even being laid off from their place of primary assignment, and that is why government is bailing out some companies in terms of start holiday, in terms of injecting funds to sectors, critical sectors, to make sure that activities is on, to keep on what productivity. That is what is happening now, and I believe with time we will see all the impact of this CBN and government on the economy, and the market would likely to respond faster now that the market is already leading the recovery already. That's why the economy is still shaking. That tells you that any little recovery in the economy moment from now will push the market higher in the up direction. But as we speak now, investors should not just panic. But what you do, that, as I always said earlier, that your investment goal should also come with your exit strategy. Now that you are seeing the market, if you have made profit, this is the time for you to hold cash. I will say it. You need to hold cash, sell off some position. The one that you should be now is those ones who are still expecting activities in terms of their markdown. Also, those who are still expecting their audited results that are likely to pay dividend. If not, those ones, especially those banking stocks and some consumer goods and some insurance stocks, you can exit now, and oil marketing, you can exit now and hold cash and watch the trend of the market. The sector, I would say, you cannot be accumulating stock now. If you are looking at the way of the telecoms and you are looking of the healthcare, fine. But for me, it is time for you to just hold cash and watch. If you want to play at all a short trade at this point, consider the low cap stock. But I will tell you, the low cap stock they are very volatile and very dangerous. They can hook you. I think I have experience in that kind of situation. For that, you should know how to play all this low cap stock. That is why once our target is achieved, we don't wait 8 seconds. We need to go out immediately, because you need to go. Most time, if you want to sell this penny stock, when the valuation is not there, it's very difficult for you to see buyer. That's why when there's positive sentiment or positive information from the company that is imparting that's attractive and is an attracting flow in terms of buying to that company, take advantage of that company, move with it, and sell off immediately. Don't set too much goal or target on that period, and that's those small cap stock. Make small thing and come out, so that you won't be hooked in such a situation. Many investors are struggling with all this low cap stock, because when they enter, they relax, and when the inflation is off and people are leaving that stock, you see that who to buy is not there. And you know that most of the big funds, smart money, will not move into such low cap stock, because of what they are small in share, they are small prices, and even the number of shares in issue are not much for that. They can't go put their funds, so they will look at blue chip stocks and the high cap stocks to play. And that is why if you see blue chip stocks, when the market is going up and their prices are low, it's fine, you can play them. At this season, that you can see that blue chip stocks and the high cap stocks are not really making move, apart from Nestle that gained last week. But we need to be very careful now, because market is really expecting these numbers to come, and as they come, there will be revaluation in the market. That's why you need to look at the prices of stock at this price before you jump in, and what your expectation of the price, unless there is a fresh fund entering the market. And also don't forget that the factors that move the market from that low in March and early April to what it is now is a result of different factors. Sentiment from the oil price recovering, sentiment from foreign investors that really wanted to exit and they were unable to exit, decided to start trading their fund within the market because they saw that the market is low. But now the exit window is gradually open for them. Even on that, they will be going out gradually. For me, you have to be very careful now, but there is huge opportunity in the market. The best place to be now is in equity market. I will tell you, I'll say why. If you look at other investment window with inflation moving from 12.34% to 12.4, the last statistics that were released, it says that many investment windows are already on a negative return. No magic on that. And where you can hedge against your inflation at this point is equity market. Why? Because this company we are buying, because of the inflation, the price of their goods will go up, and they're going to produce and they're going to make more money, and this will inflate their price. Automatically, the price of the stock will go up. Automatically, your money is being hedged already. Your money is not being eroded with inflation. All you don't need is that invest in good company. Now that yield of these companies are high, but market is just because the prices are low. But there are some companies that despite this situation, they will still keep their dividend policy, while some will cut down their dividend. But if you look at the price they are selling, they will be selling when their dividend is coming, and also when you enter and the dividend they're going to declare, you might see. But for me, the equity market is the place to go, because I'm telling you, all these funds that have been injected into the market globally, where you see negative interest in the world, I'm telling you, is going to have impact in the equity market. Yes, other investment windows are there. If you can't hold cash now, you can go to ETF, either ETF gold or ETF that that you can protect your fund in a while and come back when the market also find direction. Also, there's another way you can go to even your savings account. You can keep fund there if you don't want to trade now. But I'm telling you, keep fund for there's a huge long bull that is on that way. You need to prepare for that. Keep fund if you want to play this market now, just with 25 or to 30% or 28 to 30% of your fund, highest 35% of your fund for this short term in this window. But you have to be very careful because the market is really dicey at this point. Yes, the market on the weekly chart is still trading above the 20 days moving average. If you can see the red line here, but and also it has broken out before now the short-term bearish channel, but still on a long-term bearish channel. It says that the market is still also trying to recover, but it's a good thing that market is moving in up direction. If we go back to the daily chart, you will see that the market was, as a good trader or investor, you look at your trade chart, daily chart, weekly and monthly chart. If you look at this chart here, you can see that on the daily chart, the market has even crossed down the 20 days moving average. It's a sign of a bearish wave, that the market is on the downtrend already. After you have seen also here that the market have been on this stand trading for a while. You can see where the market has been. Look at this, and you can see market has not gone up here. The highest market has been here is around there. If you take this index now, that the highest was 25,445, and that has been even on the which date here is the last trading day of this May 28th. The market also touched 463.11. But on that, you should look at here, look at the market here, that after the market I thought the highest the volume traded here of about 5,000. Let's see, on a weekly chart, let's go to that. You can look at the volume traded to tell you that the party is really over at this point. You can look at this in this volume here. You can check this volume. You can see that the highest volume was 1.72 billion share traded. Since then, it has been on the downtrend. Let me just show you what I mean here. If you take this volume here, you can see that volume have been going down. Fine, it's a good thing that volume is going down. It shows that yes, people are not willing to sell, but it's continued that people are watching. And also mark that the volume that really put the market up here also were more, but as it's going down now, our market is trending, not has not got that volume is dropping. People are still watching, being careful. But for me, this is the time for you to really go cash and watch. If there's any position we are taking now, it's for you to look for those stocks that we are still expecting a corporate action. That is what will move the prices of those stocks now. But for me, like this week now, we are not giving a fresh trade signal, because the market has signaled already that the bear is taking charge of the market as we speak. That's why if you look at this money flow index on we're going to look at it on a weekly chart and also on a daily chart. If you look at money flow index on a daily chart, you can see that money flow has dropped from as high as what, if you look at this point, almost 90 something down here. There the funds are leaving the market as a result of profit taking, and that means smart money are exiting the market. Why? They are selling down gradually, and they've moved the market up. If care is not taken, they will sell on you. You hook there. You have to move with them. You have to move with them. Now they are selling off. They know why they are selling. They see that there's opportunity. Our market is undervalued as we speak. The market has been on a downtrend for almost 3 years. I guess the prices are low, but it is fund that matters. I told you earlier that when we saw the rally in the market, it was a result of liquidity and sentiment that pushed the market up, not because of fundamental of the economy or fundamental of the company as we speak, but because there was liquidity in the market. And I also say again, what I would have repeated in different fora where we do all this, that the 20% influence on equity prices is from the company's earnings and all those, but 80% is from from the liquidity, which is the market sentiment, from the sector market liquidity. What is happening in the sector, what is happening in the economy, but majority is what is liquidity. When there is fund in the market, and I'm telling you that this fund mostly in Nigeria comes from foreign investors. When they are in the market, you feel the impulse. But I'm telling you that as we speak now, they sign that there's sell down already in the market as money flow is looking down on the market. On the general market, you have to also be very careful. This for what? This for MFI. If you also look at your relative strength index of the market on a daily chart, you can see that it's still okay, but above 50, which is normal. But this one that is coming, it has even crossed 70 before now. You can see from just hold on, as at June 3rd, you can see that the relative index was around 75. But as speak now, it has been on the downtrend despite trying to resist up here. But you can see that the journey is still down. It tells you that the market is already experiencing what? Sell down. The strength on the downtrend is also increasing. For me, you have to be very careful. Rating strength index is looking down. Money flow index is looking down. It tells you that the market is not looking sweet on a daily chart. But if you go back to your weekly chart, which your weekly chart is also on a relative strength index, it has turned down already. It's a sign. At what? At 47.677. The relative strength index is looking down. You can see what I'm saying. After moving from, you can see that here is the oversold region. It has come up here to the sign of recovering. Then, but now you see that it is weak already. It has formed even a double top here before looking down. For me, it calls for caution at the same time. And just like I said, this for weekly, if you look at the monthly chart, it's still looking up in terms of relative index. It has also turned down already. You can see for yourself. It tells you that you need to be very careful. But money flow on this weekly and money flow on this weekly and money flow on this weekly and monthly chart is still looking up. This for money flow index. Money flow index on a monthly chart is still looking up. Also on a weekly chart, because now you can see that it's telling you that funds is entering the market on a weekly basis. Now it has moved from even as low as 42 to 45, from 45 to almost at 53.19. But I'm telling you that daily time frame gives you impulse of what is happening in the market. Yeah, weekly is also good, but you can see that the weekly is still going up. But I will tell you, there's a sign that the weekly will still go back. But if you look at your buy and sell, signal, your buy volume and sell volume for the week, see that we have a sell volume of 84% for the week, and you have just 16% buy position. It tells you that buyers are really not showing interest to enter the market at this current price, while sellers are lashing on the market to take their profit out and watch the next trend. Actually, for what I tell people, or I always tell our clients, our followers, that when you see market in this kind of trend, you don't need to panic. You can see this red, two red here within those 4 weeks. Not red. You can see market has been in a missed direction, in a missed trend, and at the same time sign trending. If you can see here, for me, we need to be very, very careful on a weekly chart. But if you go to daily chart, you see that your MACD already has crossed down, which I told you earlier before. Now for more than a week, MACD has been on that trend. It tells you that the momentum behind the trend, the uptrend is weak already. It's looking down. It has crossed even the signal line to the other side, to sign of bearish. For me, investors also with this for daily chart. If you look at the weekly chart on MACD, it's still also looking up, but looking up as giving a sign that it's already turning. You can see here that there's no uptrend here. This is almost a flat position, telling you MACD will soon go back on the or down direction. That is on the weekly chart. All these are signs that you should look at, that the market at this time is very, very dicey, and most of the factors that we are seeing is pointing down. The intervention we are seeing is good. It's going to tell us that, it's telling us that it's pointing to that the recovery might come fast, but it's not immediate. That's why after this second quarter numbers in terms of economic data and corporate earnings, you see where the economy is going. It will now show you the real position of the economy and what had happened within the month of April, that the economy was on a lockdown. This was going to reflect on the numbers. I'm telling you, out of the 180 active listed company on the exchange, I'm telling you, more than 95% of this company are going to post a decline in their Q2 number. Why only just few companies in some real sectors that the lockdown did not affect them because of e-commerce and other activities, because of the sector. Yes, will post an improved number, but I'm telling you, majority of the companies are going to post toward a decline in their Q2 number, and that will be factored into the price. That's why I say revaluation will keep these companies down. For me, this is what's happening. But if you really want to take advantage of this market as we speak, you need to get the earnings, mastering the earnings season for profitable trading. I'm telling you, this is a life material. Whether you are a novice or a professional, you need this material. Why do you need it? You need to know how to make money, even on a quarterly basis. I've said it earlier. Or you don't need you need these materials to move ahead. You need to know when to be in the market, whether it's a bearish market or a bullish market, whether it's an uptrend or downtrend. Earnings is earnings, and it's mandatory that every company will release results to the market. If you know when to release the company and how to take advantage of it, you can make money at every different earnings, especially the quarterly and the full year. You can trade earnings alone and you'll be making money in the market. Before we round up from this review, we want to look at the stocks that really top the gainers for the week. If you look at what happened in the week under review, we'll quickly look at the gainers chart and the losers chart, and the reason why these stocks were there. If you look at the losers and gainers chart for the week, I'll tell you that for the week under review, only just 14 stocks were up for the week, while 47 stocks declined during the period. And the gainers chart was led by Honeywell Flour Mill, and I'll tell you, this Honeywell was as a result of the positive news that government has given them a tax holiday for 3 years. You know what it is, and that is why market reacted to it. And also, we should not forget that government giving you tax holiday does not mean that you will go and pay dividend. Go and check in the world. Government is because they want to keep employees of this company. They want to keep this company in business. That's why so that they won't lay off people, so that productivity will still be there. That government are doing all this. It doesn't mean that because they are giving them Friday, yes, their number will be good subsequently because they are not going to pay tax. That means they enjoy that. They will see an improvement in number. That does not automatically translate to what good dividend from the company. But now, like traders are taking advantage of this price. Yes, if the numbers are good, it might sustain the price, but that does not mean because they are giving a tax only, you expect dividend from them. Also, if you look at what happened also in Nestle was among the top 10 gainers for the week. Nestle moved from 995 naira to about 1,094.50, and that is about 10% gain. Just like as Honeywell gained 17.39% for the week. QTs was still expecting the markdown for the 12.5 kobo dividend they declared. Resta as among the top gainers, Resta has released their unaudited full year 2020 March unaudited full year ended March 2020, and their numbers are not too bad, and we're expecting dividend in the range of 35 to 40 kobo, and that is why you can see the price there gaining 9%. Even after touching as high as 390 before coming down. I'm telling you that these are stocks that you'll be looking at because March account will be coming very soon, and I'll discuss on this company that now that the earnings, that is why you need to have that earnings season pack. For those earnings that are coming, when should that be there? Because in that video, I tell you that they what we call the value area in technical analysis, what you can use to combine with your earnings. When is it coming? Where is the stock at particular what time? Is it within that value area of the technical analysis? If it's in that value area, okay. If now if you break out, how is it going to go? If you go and check other companies, if you are taking that before that material came out, we have done our analysis how to trade earnings, because earnings is very key. You can use earnings to make money because this is activities during earnings season is different from activities in the normal market. There is always an aura, there's always the momentum that comes with earnings season, especially when the earnings season is for many companies, especially those that have December year end. When they are raising the result, either quarterly or full year, you see there's another aura. Even when the few March accounts coming, you should know how to play it. You should know how to every company that has any, you should know how to play them. Even they have different months, or for the exactly the month that they are full year. When they are quarter, you can take advantage of that earnings, because during the period of earnings season, I said earlier, the momentum in the market is different from other market season. For that, take advantage of this earnings season. That's why you need to get that video and really sit down and watch it. It's for you, and it's a lifetime material. That's why for now the launch price of this material as we speak is just 10,350. At the end of June is 15,000. Now why is that? Because both professional, both novice, both retirees, you need it, because it will tell you how to take advantage of it, because company will not give you what they don't have. Even as a trader, you know that this is time for you to be in this stock call, this is time for you to exit. If you know all this and why you are buying and how to know that this company earnings is good or not, you should have it. Because like always tell you that if you see a company that is posting a positive earnings and the cash flow is not looking in the same direction with that company, you are just taking position in a company that you are not sure, especially for dividend paying companies, dividend paying investors, and retirees. You need to know why this company is going to pay dividend, and will they have the strength to pay the dividend. You will see the number yourself, so that when we are waiting that company, you know why we are waiting. Don't just say because this company, because I will say it anywhere that it is not the name of the company or the brand or the white man or the black man or the management or how much they pay their staff that matters. What matters that you as an investor, what comes to you, you need to see their bottom line. You need to see the earnings of this company. Once this is done, you can know whether you should hold on or not. Now, among the 10 gainers, it was the Cornerstone Insurance, Skyway Aviation Holding Company, which this company has really just on 16 kobo 0.5 dividend. I'll tell you, it was not like it was just sentiment, and also the directors of this company to like, come on, this is the first dividend they are paying, they listed on the exchange. And if you look at NACO that paid 30 kobo, they are not really the same. That means you should ask yourself, the shareholding structure is playing out here, and also the sentiment from different angle. When the director of the company is trying to to increase stake and all those stuff, you should expect the price to go up. And also that's what I'm preparing to do very soon for investor. There are other what we call analysis beyond fundamental analysis, beyond technical analysis. Those ones are analysis that you need to know, that when you are looking at stock, you bring those things into play, and that will also help you. Because for me, technical analysis will represent all this, but if you know it in the other way, even like those that are not technical analysis now, you don't have the material, the software. If you have those common sense ideas in your trading plot fundamental, it's going to help you too. That's why I'm preparing to have a training on that, so that you can take advantage of what is happening in the market now, especially in going forward. Among the losers for the week, the top 10 losers, you see that Nimet International Pharmaceutical PLC top the loser chart with almost 40 points, and this high he gained for like almost 3 weeks, and he gave the investor about 400% return for in less than 2 months. Also is going down, but I'm telling you, if you miss the rally in this stock, you don't need to regret, because it's coming to a level that it will find a support level, and it's going to go up. Don't forget that this company Nimet has September at year end, and this fund they inject in that sector is going to boost activity. And also, if you look at this company expenses and their bottom line and their way of operation, they are very conservative in terms of expenses, in terms of being what will I put it now? They are very efficient in terms of managing cost. For me, the money I'm going to give them will also further boost Nimet performance in terms of numbers. And this is a bailout too, and also they are going to pay interest, but that does not stop these ones from paying dividend. I'm telling you, their own is for you to, they are giving them loan, and that loan you are giving them, they are paying interest. So despite that it is low interest, that will not stop Nimet from paying dividend if they want to pay dividend. But for that of Honeywell, it is tax holiday they are giving them, and you can't be on tax holiday and you are paying dividend. Government is trying to make sure that your project, that means they are giving you tax free holiday. It doesn't mean that you go and increase your director's fee or this period of this tax holiday. No, it's for you to make sure that your business is improved. But for those in Nimet, they are going to pay, like those Nimet and all those, especially the healthcare, they are giving them fund. Yes, they might enjoy free interest rate for like 1 year. That is for the business, but they know that subsequently they be paying interest, but the interest is not as high. Now interest has dropped from almost 9% to 5% for such loans from intervention loan. Is give them an advantage to take advantage of this loan to expand their business, to keep employees, employ more. That is how government want all this intervention, so that they will keep employment, even open door to employ more, because with the fund they can do more business and employ more people. Just to create more employment, government is trying to do that the economy keep running, so that the purchasing power of people will not go down lower than what we are seeing. That's why this intervention is going on. For Police Microfinance, this is a company that, yes, they declared 20 kobo dividend. It was marked down last week, and it lost 25.13%. It's okay. While Prestige also declared 2 for 11 bonus. That means for every 11.5 you have to as a new share, and the price dropped from 70 kobo to 57 kobo. But I know that this company is one of the best performing company in terms of numbers, but it has been stable. This is one of the companies that I know has not gone below 40 kobo, despite other insurance companies that have hit 20 kobo, 21. This company has remained stable at that price. But you can see ICO also lost just 18 kobo to close at 15 point to lose 15.25% for the week. ICO, it's understandable that because of the conflicting information that came, one, they extended their bonus corporate action to around September, and the qualification date for the right issue was last week. On that there was a mix of people trying to like react, but I'm telling you, there is future for ICO. I would say it anywhere, because ICO is one of the insurance companies that has strong pension at their back. And not only that, as you are expanding your capital base, as you are capitalizing, it gives you room to do more business, and that that it's only this part of the world that the banks, the ones as big company. Other part of the world, insurance companies are the ones that even own the bank because of their inflow and because of their activities. But I think most of our insurance companies are coming up gradually, and ICO is one of them. For me, it's future for ICO. But for UACN property development company, I would say investors should be very careful in this company. Like I said earlier on one of the programs, that as immediately that this company released their last right issue about 18 billion shares, and the main the shareholders before, which is the UACN, is going to for now share their own holdings in that company with their shareholders. And I said this is a special, in form of a special dividend, and they might likely sell down. And if they sell down, it's going to put this price further low. For me, if you are there now, you can start exiting and hold. Then when it comes low, you can enter again, knowing that the property business, as we speak now, is not really doing well because of the economic situation. For UACN to property to make profit, that yes, they have investment in their reinvestment, the estate investment, fine, but that really will not cover for a whole activity because the economy is not really doing well. For me, you have to exit now before that the social business is given to those in UACN company, the parent company before now. And then also you can see Sterling Bank losing 11.11, which is there. Aviation, you can see Caverton was marked down too, and it rebounded that it was marked down, but it closed lower again at 2 naira, losing also 11.11. But then another one is NACO, that is a Nigeria Aviation Holding Company. For me, NACO that still has almost a week again to the markdown date, and the company declared most tacticable dividend. For me, this price for those that are dividend income traders or investors, this is the time to also look at this stock, for you to know a stock that declared tacticable at 2 naira 60 kobo is attractive enough. Then you can see that University Press was among them. When they lost 12 kobo from the opening price of 120 kobo. For me, these stocks are attractive, especially those that has March at their year end. Now, knowing that University Press is one of their March account, you can look at the price it's selling, and that's why I said you that you need to get the material. You see whether this University Press is still within the value area of the technical analysis as the earnings season is on for this company, and this company is likely to reach any moment from now, because March is the year end. Yes, I know there's an extension of 2 months to them too, what they did to the December account. Fine, you should know what to enter, so that when the result finally come to the market, what are you going to see happening? That's why you need to get that material and know when to position for earnings. Earnings is part and part of the market. It's as old as the market. You need to know how to. This is another simple way to make money in the market. If you know how to use earnings season to make money, I'm telling you, you have increased your chances of becoming a millionaire, a billionaire, and a trillionaire in Nigeria stock market. Thank you, and God bless you.